BYD, the largest manufacturer of electric vehicles in the world, has had 45 billion US dollars wiped out of its stock value price. How has this happened? Why has this happened? And where is it going to go from here? Because, like I said, Chinese electric vehicles right now are absolutely booming. Obviously, they dominate their domestic market, but they also do very well abroad now as well. They're getting a real foothold here in Europe, for example, and it's only a matter of time before they break into the US as well. But this is a huge setback on paper for them. But what is going on here? Because, you know, if you follow Chinese economics even loosely like I do, you know that things are rather volatile. Very much boom and bust is kind of the norm for these things, but still, this is concerning, I would say, just going off of the headline here. But what are the details of this? What is the nitty-gritty when it comes to BYD and its stock price? Let's have a look, guys. So in just 4 months, the BYD stock price has crashed by 30% on the Hong Kong Stock Exchange from their record highs earlier this year. That has resulted in a staggering 45 billion US dollars being wiped off of their market value. Thankfully for other technology companies in China, they are not seeing a similar trend as BYD right now. This is something that's unique to BYD. Their big rivals such as Geely Automotive and Zhenjiang Leap Motor, they have actually managed to hold their ground, but BYD have regressed, financially at least. And understandably, there have been serious questions asked of BYD and their strategy and whether they are actually doing more harm to themselves than good right now. Going off of this, perhaps the former. But what's causing this? Well, from a foreign perspective, BYD are doing quite well. Like I said, they're getting a real foothold here in Europe right now, but BYD themselves are not actually doing as well as others in China. See, the fact they've got so many EV companies right now is actually hurting some of the more established brands, and they're actually caught in a bit of a domestic price war at the moment. Car makers over there are slashing their prices to try and drive up sales, and BYD have not done so as effectively as some of their other competition. So overall, their market value has actually decreased as a direct result of this. And in fact, their profits have actually plunged by 30% since June, which is their first decline in profit in over 3 years. Now, the Chinese government have responded to this. They've called this so-called involution actually detrimental to the Chinese auto industry in general. So, unsurprisingly, they are considering some tighter regulations when it comes to these price cuts. Effectively, if everybody is cutting their price, then the companies are not making as much money as they should. This is great for consumers, but it's unsustainable for a lot of car companies. And to an extent, we actually do see this in other parts of the world. Of course, a lot of companies are actually making smaller profits per vehicle, or in fact, actually making a loss on some electric vehicles to avoid getting fines as a result of EV mandates in some nations. Of course, the UK being one of these with our zero-emission vehicle mandate that some companies like Ford did not meet last year, and therefore they got a hefty fine as a result. So some actually do produce more electric vehicles knowing that they will not sell, but it actually does mean that they avoid a fine. So overall, they make money. Gotta love business sometimes. It's very complicated, isn't it? But I hope that all makes sense. I've done some other videos going over that in more depth if you guys want to watch them, of course. BYD have also slashed their company targets in terms of vehicle production too. They're hoping to deliver around 5.5 million vehicles in 2025, but that has been cut to 4.6, a decrease of nearly 1 million. And in fact, that's actually quite ambitious, as so far during this year, in the first 8 months, they've only managed to sell around 2. And that's actually rather ambitious, to be honest, because their sales so far in 2025 have only been around 2.9 million. They need to sell 1.7 million in the remaining 4 months of 2025 to even hit that target. So what does this all mean? Well, BYD will be fine in the long term. I have no doubt about that. China will not allow them to just go under like that. They'll have to put some more regulations on the auto industry over in their domestic market to be able to actually to protect the companies, but that will come to the detriment of the average Chinese consumer, and whether that will hurt EV sales in the long term is anybody's guess. But yeah, when it comes to economics, China is crazy, honestly. You can go down many rabbit holes when it comes to how things work somehow over there. Just look at what happened with their property crash not too long ago, built on an absolute house of cards, and the auto industry potentially could go a similar way, but I don't see that happening just yet. But your thoughts in the comments below, guys. I want to hear what you have to say always about this. Like, share, comment, subscribe as always, guys, and have a fantastic day wherever in the world today. See you very soon.